Welcome to the Deal Breakdown. I'm realtor Westley Colebank, your buyer specialist.
And I'm Phong Tran of Tran Property Group, your seller specialist. And together
Together,
we
we
are
are
the
the
Deal
Deal Breakdown.
Breakdown.
Everybody, welcome to the first episode of the
Woo!
Deal Breakdown. It's very exciting. In 2025, myself and Phong, we made a goal to create a podcast. Now, a lot of real estate podcasts are actually out there for other realtors.
Right.
How to talk to leads, scripts for certain, sellers, buyers, what have you, or just advice on how to transact and get more business.
Yeah.
Instead, we wanted to make a podcast that we could give to buyers and sellers. Now, at the beginning, obviously, you heard I was the buyer specialist and Phong was the seller specialist. And what that really entails is that myself, I'm going to be looking through the lens of a buyer. And I'm going to be really on the buyer's side. As a buyer specialist, I work exclusively with buyers at this moment. And I have transacted well over 24 buyers in the last 2 years. And so I'm pretty versed in that. And Phong, give us a little bit about you.
Yeah, I am your sales specialist, like I mentioned at the very beginning. My goal whenever I'm representing seller is obviously one, to protect the equity, but two, really guide them through the process of the negotiations because Wes, would I be incorrect if I said we're not leaning towards like no longer a seller's market, but more towards a buyer's market, right?
Oh, definitely. I
Yeah.
mean, I'm sure you've been watching the market shift.
Yeah.
And we're certainly heading into a buyer's market. And
Yeah.
that's something that we are going to be talking about later on in the podcast.
For sure.
And I think you mentioned something very key to what we're trying to do here. And the word is value and
Yeah.
protect equity, which always comes back to value. As a buyer specialist, my goal is to get the best deal for my buyer, but also give them the right advice to not trip themselves up.
Absolutely. And the goal for me as a seller specialist, whenever I'm representing them is to, like I said, protect the equity, really negotiate because since we're heading towards like a buyer's market, like I mentioned, these buyer's agents, such as yourself and these other agents, they want to get a deal, whether it's max credits on a certain house or specific amount of money in terms of trying to meet that monthly payment because interest rates are so high, right? And so I think us together coming in, providing value to the consumers is going to be important because we're in that gray area or that middle section where it's not necessarily like a true buyer's market or a true seller's market. And so providing value and, giving that information is key.
Couldn't agree more. And that's exactly what we're going to be doing on this podcast. Every single episode, we're going to talk about current events that are happening in the market, the real estate market. Obviously, if there's an economic policy or some turn in the greater economic market that affects the real estate market, we're going to touch on that.
Absolutely.
Mostly, though, we will be focusing on current events that are coming out. And at the same time, we're going to be talking about things that we've picked up along the way. We're going to talk about specific transactions from the buyer side, from the seller
and
side.
the seller side, specific headaches that either party can potentially have, negotiation strategies that either side can also have, and it's going to be great.
And we are going to agree probably most of the time. At the same time, though, we have very different
Ideologies.
ideologies is a great word. Very different ideologies. Obviously, you as a seller's agent, you are trying to get the most money. The sellers are logical. Would you say that's correct?
I would say they lean less emotional, more logical. So you are correct because most often these times they're either older sellers, they're trying to downgrade, and it's their nest egg, right? Or it's someone who is a young family and they're trying to upgrade, and so they want to make sure they have a good sizable down payment and equity so they can just easily transfer it without maybe not necessarily increasing their monthly payment.
Yeah. And buyers, I'm sure you'd agree, are way more emotional. They
Absolutely.
come
Yeah.
from a standpoint of emotion. I would say, as the buyer specialist, mostly because they see the potential of their life. They
Absolutely.
see themselves in the house, making a family, or bringing their family there. They see the future. Whereas a seller is looking more at the bottom line.
Yeah, for sure. And we want to preface that we're not strictly just, I don't strictly work with sellers, and he doesn't strictly work with buyers. Like I work with a lot of buyers right now, and he's doing the same thing with his listings. And so we just specialize in a certain
Mhm.
field or niching down in a certain field, but we do still work with the other side.
Absolutely. And that's going to be it's going to be a great way to have insight on both sides. And that's why
Absolutely.
we're mostly going to agree
Yeah.
because obviously we do work both ends. At the same time, we specialize for a reason.
Yeah.
And that is another reason to tune into these podcasts, to tune into, we're going to be putting out clips on social media for more digestible content, easy, quick.
Yeah.
And that's because at the end of the day, we specialize in our field because of our personalities and our ideologies, like you
Yeah.
said.
It's a journey.
It's
It's
a
gonna be
journey.
it's gonna be fun.
And so as we enter into 2025, we are going to be talking about one of, I think, the most shocking bits of current events, if you
Yeah.
will, or statistics that we've gotten in quite some time. And that is in 2024, 45 to 47%, depending on what what source you look at. 45% of realtors did not transact a single time,
Yeah.
did not
That's
sell a
crazy.
single home. And so, Fong, I'm going to shoot it over to you for your first thoughts. Why do you think 45% of realtors
Yeah.
didn't do a single thing in
Yeah.
2024?
That's crazy. That's almost obviously it's almost 50%, which is an astounding number. I think, I my first thought it relates to, I'm sure you've heard of the principle. It's called Pareto's principle. It's
Pareto's
the
principle. Yep.
80-20 rule where 80% of your outputs is 20% of your inputs or your efforts into whatever situation. And so how I relate this to real estate is it's highly competitive. It's an industry where you're always competing, right?
Mhm.
Especially now with the whole buyers and the whole NAR settlement, you're also competing as a buyer's agent, not just a listing agent. But going to the 80-20 principle, 80% of all sales, let's assuming it's the Portland market, 80% of all sales is done by 20% of the top agents. So what is the rest of the 80% agents? They're competing over 20% of the pie.
Mm.
And so it's just highly competitive. And so as a new agent or even like an agent who only does a few transactions a year, they're entering into an industry that is competing with people who are doing this for a very long time. So they have a steeper learning curve. But in terms of the consumer, I think this is important to know is because if there's so many agents out there, but there's only so little homes, I'd say about 50% of the time you could be talking to an agent who's not protecting your equity, who's not trying to get your own deal, who's not
Mm.
negotiating on your behalf. And so as agents, yeah, we got to focus and provide more value for these consumers, but I think it's also important to know that as a consumer, you should probably start interviewing agents, whether you're a buyer's agent or a listing agent, because if we're looking on the buyer's perspective and they're looking, this is their future, right? This is their
Mhm.
nest egg. Like if you're choosing an agent who's just looking for the next paycheck, is that really smart for their future?
It's a very good point. Yeah, that was really well said. You touched on interviewing.
Yeah.
I think that is a great place where our viewers can gain some value from this podcast. We are in a market where you need to interview agents.
Yeah.
My God, growing up, do you know how many times I heard seek a second opinion?
All the time.
All the time. And that's because not every mechanic, not every dentist, doctor, whatever, realtor is going to be the same.
Right.
And so interviewing is going to be key.
Right. Because, Wes, would it be? incorrect if I said if all agents were the same, we would all have the same results. And so it goes
Yes.
back to the 50% statistic. You know, it sucks that I have to interview and compete for business, but this is the industry that I joined.
Totally. Well, and you 50%, I think you really got to find out how experienced your realtor is. If I was a consumer and I was looking to buy a house, if they hadn't sold a single home in a year,
Yeah.
one, that realtor probably is not keeping up
Yeah.
with how the market's shifting,
Yeah.
not keeping up with, my God, we get changes to our documentation
Every year. I mean,
constantly,
I'm taking,
sometimes
yeah,
multiple times a
yeah.
year.
I'm taking a class next week on just changes of the buyer compensation
Yeah.
and all these forms and all that
My
stuff.
God, I wrote an offer today, and I wrote an offer 2 weeks ago. I wrote an offer today, and it was already different
Yeah.
than when I wrote it 2 weeks
New
ago.
forms are out.
Obviously, it's the
Yeah.
second day of 2025,
Yeah.
so this has probably been in effect for
Since,
less than 24 hours.
yeah.
At the same time, you need someone that's on the pulse. And so, yes, interviewing,
Yeah.
absolutely. And that is another reason we're doing this podcast. Obviously, we ourselves want to help the consumer personally, right? If I was a buyer, I'd probably want to hire me. If I was a seller,
You should probably hire me
probably hire Phong Tran.
and probably interview a few other agents. Yeah.
But we are going to give you the tool belt here to be able to distinguish a good agent from a fly by night agent.
Yeah.
And so getting back to this 45%, I do want to mention so statistics are huge. And one statistic when I entered into this field that I heard quite often was the average agent sells 3 houses a year. Now that's average.
Yeah.
Fong, how many units did you sell last year in 2024?
Last year in 24, I sold 36 units.
Okay. Let's take a pause there.
Yeah.
36 units. So now, if you take 36 and you take one of the 50% of agents that didn't sell anything, take two of you and you divide it by two, that's 18.
Yep.
That's an average of 18 units. So as a consumer, you really need to think that, yeah, 45% of agents didn't sell a thing. Even more, I would
Yeah.
say, and going back to your 80-20 rule here, the rest of that 80% probably sold one,
Yeah.
two, maybe three,
Yeah.
just to offset Phong Tran.
Yeah. And I think you make a good point. It's not about how long you've been in the business, because a person could be in the business for 25, 30 years as a realtor, but they could also be working another job, a W-2 job, and they're only selling 1 to 2 homes a year. Are they really on par with the current changes in terms of documents as well as the market? I think what you made a good point. You have to focus on actual production. How much deals and how much, in the trenches there are in daily in terms of whenever you're interviewing these agents.
Absolutely. Yeah. Being in the trenches is something that you need. I think a lot of it too is there is a very low bar to enter into
Yeah.
this industry.
What is it now? I think you just need a high school diploma,
High school diploma or GED.
right?
Ooh la la. No offense to anybody with a GED. That's amazing. High school diploma, GED. You need to complete a certain amount of hours,
Yeah. What is it? 150?
150 hours,
It's been years, I think.
and then you need to take a national test and then a state test. And once you do that, you are a realtor.
Yeah, that's crazy.
And I'll tell you right now, I'm not gonna be humble here for a second, okay? I was working a job full time as a Orange Theory coach, and in 6 weeks, while I was working full time, working out, doing everything else, in 6 weeks, I completed my 150 hours. I studied, and
That's
I
awesome.
passed both tests.
That's awesome.
Now,
I think it took me 3 months just to finish the 150 course, maybe more actually.
so well, there, I'm mostly that's still very awesome. I'll give you props for that. Still, though, I'm just trying to say that you could work a full time job,
Yeah.
do it in 6 weeks, take a test,
Oh yeah.
and you're a realtor. So the bar is low.
Low.
However, entry is a low bar,
Yeah.
but succeeding at being a realtor, that is a high bar.
It's extremely I say it's extremely difficult. It's because
Absolutely.
you now become a if you don't join a team, maybe you're an individual agent, you now are the jack of all trades. You have to do your own marketing, you have to do photography potentially, you have to write verbiage. And so you have to kind of take on all these hats to be an agent, and also you still have to make an income, put food on the table.
Totally. And also, a lot of agents are part time. I think that's something to really think about.
Yeah.
It really depends on the type of agent they are, what their lead sources are, who they work with. I know
Right.
a lot of agents. I would,
Yeah. And there's nothing wrong with part
nothing wrong.
time. I think it just goes back to like, when you're interviewing a buyer's agent, like, would you rather have someone who's actually knows what they're doing like at least 10 deals a year
Mhm.
versus someone who is just part time and working another job concurrently?
Okay. That's so important. So, buyers, if you're going to take anything away from this, if all your buyer's agent does is open doors and shows you pretty houses,
Yeah.
that is not a good buyer's agent. You hire this buyer's agent and they're getting paid for their expertise and advice, not to open doors.
Yeah.
You can do that with anybody. We have agents that have showing agents that open the door.
Yeah.
But why are they showing agents to a bigger, better agent? And that's 100% because of the advice
Yeah.
that that buyer's agent gives. You need to have someone that knows the market and can guide you in the right way, and somebody that is not going to let you trip yourself up.
Yeah. It just goes back to, I mean, it's extremely important. It goes back to like, now you have to give value because if I'm interviewing you, Wes, as my buyer's agent versus someone who's just opening the doors, but you have the knowledge, you have the statistics, you have the sales as well as the track record. Obviously, I'm going to choose you as my agent versus someone who just opens the door. Now,
Totally.
will you get sales?
Oh yeah.
As Yeah, you'll help people. Maybe it's people your sphere of influence. Yeah, you'll get sales, but I think the difference between that type of production and really helping a family and their future out,
Mhm.
there's the difference of experience.
Totally. If if you're in the Portland metro market, you come hire me. Okay, if you're buying a house. If you're outside the buyer's market or outside of the Portland metro market rather, and you're a buyer, you need to ask the right questions. Don't hire an agent because Becky, who drops their kid off at the same school as you,
Decided to pick up their own license.
is a realtor,
Yeah,
super califragilistic,
yeah,
whatever the word is. That's awesome. Good for Becky.
yeah,
You need someone that knows what the hell they're talking about,
yeah,
can negotiate, and get you into a house for the right value.
yeah,
I get it. You're a buyer, you're gung ho, you're emotional. In the market we're in, with the interest rates that we have, with half the people not even doing it once last year,
yeah.
don't hire Becky. So don't hire Becky. Uh,
Yeah, don't hire her.
now, Fong, would you say it's the same thing for sellers needing experience? Seems kind of obvious, but what are your thoughts?
Yeah, I mean, I think what's also important to understand is, especially since we're reflecting on 2024, is let's talk about the amount of volume in terms of transactions. Now, this is more in line of like a national level. I think the number or statistic is we saw 2 million homes sold less in 2024 than 2022. 2 million. That is a astonishing, surprising number. And I think, 2022 was what the peak of the housing market, you'd say?
God, yeah.
Yeah, I mean, it was the peak of the housing market. Obviously, in 2024 and even heading into 25 is interest rates.
Totally. And just to give you the statistics here, Phong.
Yeah.
I don't know if you know off the top of your head. If you do, then
No, go for it.
just being an asshole. So 2 million less. What does that mean? So in 2021, there were 6.12 million transactions in the United States.
This is 21.
This is 21. In
Okay.
2022, 5.03 million homes sold. That means in 2024, only 3 million homes sold.
Yeah, that's crazy.
So you talked about it, interest
Yeah.
rates. How, Fong, how do interest rates affect transactions? How many?
I think it affects a lot because as a seller specialist, we want interest rates low. What we saw during the pandemic years, 2020, 21, and half of 22. We saw all-time lows in 2, 3, 4%. And that equated into a large amount of transactions. Appreciation happened at 18 to 20% versus what we're seeing now. It's more in line of what is considered normal, like the 3 to 5%. And obviously, during the COVID years, that attributed to a lot of like what we were seeing. We were masked up. A lot of the people or homeowners were cooped up. They started to move more towards rural areas to be away from people. And not only high interest rates, what we're seeing now is a lot of economic uncertainty. And
Yeah.
that relates to there's a lot of global wars happening across the seas. And then we're still dealing with a inflation problem. I think
Definitely.
CPI, at the peak of the COVID market, we were at like what, 9% from what I remember.
Yeah.
We're closer down towards like 2.5, 2.9% now, which is a lot better. But I don't think we're near where the Fed wants, like Jerome Powell. And we are starting to see interest rates. And so this is extremely helpful, but something that the consumers typically get incorrectly is that what you see on the news, like Jerome Powell and the federal interest rate, doesn't actually align with the mortgage rates. It's not
Yep.
concurrent. Does it affect it? Absolutely, absolutely. But it's usually like a lag measure, if that makes sense.
Well, totally. And I don't know if you want to kind of explain this or if you want me to take this, but basically,
Yeah.
when we look at, let's just talk about this. Let's talk about the Fed rate cuts. I think that's very important.
Yeah. And
So
I think the most recent one was what, a quarter?
a quarter,
And the
a quarter,
prior one was half, right?
half. Yep.
Okay.
So these were two big rate cuts that we saw towards the end or latter half of 2024 for 50 basis points, or if you want half a point, half a percentage. Point means percentage, everybody. And 25 basis points, a quarter point, or 0.25%.
Yeah.
So in reality, that should translate to 0.75%
Yeah.
less
Yeah.
on interest rates. It obviously doesn't. And I don't know, Fong, if you want to go into why it's a lag measure and not a one for one.
It's because it's tough to explain that because sometimes what the Fed is looking at is more towards the national level, and this is more in line of not necessarily residential loans, but this is terms of the banks and their interest rates and what they're charging consumers in terms of business loans and commercial loans. And so could the current interest rates that we're seeing now, is it already cooked in, already baked in into the rate cuts that we're seeing? Because correct me if I'm wrong, whenever these cuts happened by the Fed, we didn't really see a reduction in rates. We saw
Yeah.
obviously a slight reduction, but then it bounced back up to where we currently at. And so I don't think realistically no one knows.
Totally. And something to really consider is that interest rates are not only they're not only affected by rate cuts from the
Yeah.
Fed. They every day I log in to look at what the interest rates are for the day, the average, right? This is average
Yeah. What is
for
it?
everybody across the board.
I think I checked this morning. It was like 7%, which
Yeah.
is what we've been seeing for a few months now.
A couple months
Yeah.
ago, actually, it was closer to 6.15. So we've been bouncing up from 6 to 7 a lot over this past year. And we had a rate cut. Why are the interest rates higher than before? A lot goes into it. There's a lot of speculation, obviously. I saw one of the largest, a ping up in the interest rate. Obviously, there's a lot of speculation around the presidency and where the political world is. You mentioned world wars. There's just a lot of
Yeah.
uncertainty and speculation, and that changes it quite a bit.
Yeah.
Uh, but going back to 2 million homes, 2 million less homes sold,
It's a lot.
that's a lot. And a lot of it comes down to people are uncertain about where this whole economic battleship of the United States of America is
Yeah.
turning. High inflation, everything seems more expensive.
Yeah.
I'm buying eggs, not this week because of bird flu, apparently.
Yeah, I saw that. I
Jeez.
was in Fred Meyer's and I was shocked by 18 count of eggs was 11.95.
Yeah, it's
And I
absurd.
used to be paying like $3 to $4.
Of course.
Yeah.
Well, what do they say? It's eggs and milk are the indicating factors of inflation.
Oh, it's not a Waffle House.
It's not Waffle. No, it's not Waffle House.
Right.
Well, and something to really think about is the affordability. Right, back to real
Yeah.
estate. It's all about affordability. Now, as a seller's agent, obviously you have a number, and
Yeah.
well, Fong, don't want to steal your thunder here. Talk about. So let's say I'm a seller, okay, and I come to you and I want to sell my house. What are you doing? And I want layman's terms. I want you to talk to somebody that's never sold a home. I've never sold a home. How do I price my home? Where are you getting that price from?
Yeah. And so what they're looking for is a comparative market analysis, a CMA. And so how I structure my market analysis or home valuations is I use a combination of sold or homes that are sold within the area. It's usually in pretty close proximity because that's going to be your best source in terms of like an actual evidence. And then I'm also using actives. Now, the reason why I use active, and not a lot of agents do this, is because this is your competition. You know, as a buyer, from their perspective, whenever they're looking in an area, they're also looking at 3, 4, 5 other houses within that area because it's usually a short distance. And so I got to see what those actives are. And then I also use pending. Now, with pending, I do one step ahead. I'm actually calling the agents, the listing agents, and figuring out what did they go under contract at because we don't actually know until the deal closes. And so having that 3 data, but I also take it one step ahead and I also pull expired data. And the reason why I do this, it's mostly because I'm trying to prevent sellers, or maybe I'm trying to give them proof that if you price it too high,
Yeah.
you'll end up with potentially a canceled or expired sell. And so I'm using a lot of statistics and then just proof in the pudding to really value my house. And I used to spend not too long in terms of like my listing presentation of presenting the market analysis. I'm spending a lot more time on it now because right now the sellers that I'm talking to, they still want to believe that it's the 2020, 2021 markets where they can overprice it and they'll still get what they want. But realistically, it's no longer that market. And so it's important for me to really convey that your home, if it's overpriced, you'll actually end up losing more money than what's intended.
Totally. And from the buyer's perspective,
Yeah.
I'll tell you right now, yeah, and Fong knows this. Everybody I've worked with knows this. Days on market is the bane of a seller's
The
existence.
biggest enemy.
It's the biggest enemy. And that's because, let's say you're going to buy a house and you see that a home has been on the market for 100 days. Your first thought is, what the hell's wrong with this house?
Yeah.
Why has nobody bought this house?
Yeah.
Now, average days on market has gone up here in the Portland metro market for certain. I think last time I checked, it was average 115 days.
Yeah, I think I'm looking right here. I'm pulling it from straight from the RMLS. In December this year, the average market or days on market was about 2 months.
2 months.
Yeah,
Okay, so
which
it's
is it's pretty typical in this one. It's the winter. We're
for
holidays.
sure.
We're seeing family, and so it's still 2 months on the market. That's a long time.
So to give context to what average days on market means is that if you take all the homes in a certain area, and the RMLS is our regional multi-pull listing service. Basically, it's an MLS. Agents go on there. It's our cool back end Zillow, if you will,
Yeah,
that gives us a lot of data. And days on market, average 2 months, means that on average, it takes about 2 months active on the market for it to be sold. Now,
yeah,
pending days also count towards it.
yeah,
So do know that. But basically, it's actually shorter than I thought it would be
yeah.
for December.
And this doesn't apply to all houses. This is obviously a very broad look. The
Hmm.
most critical timeline when you sell a house on the seller's perspective is within the first 2 to 3 weeks.
Totally.
That's where you need to figure out, do I need to make adjustments? Because if you're getting offers within, those first weeks, then you're probably right on the money. But if you're getting a lot of showings but no offers, you're probably about 3 to 5% away from what is considered market value. But if you're not getting any showings, you're probably anywhere between 8 to 10%. And so that's something to definitely consider. One,
Or
as a
higher.
buyer, yeah, or higher. Exactly. Exactly. Yeah. Those unrealistic
Yeah.
sellers like Becky, right?
Shout out.
Shout out to the trophy wife. But yeah, and so it's important to understand that, it goes back to what I said about the CMA. You have to price your homes correctly. And that's why recently I've included expired data just so I can have proof that if you overprice it, you could expire and lose more money.
So, Phong, what I'm hearing is that you bring a comparative market analysis, a CMA, to the listing appointment.
Yep. Oh, absolutely. Printed.
Yes.
Yeah.
Let's say you sign that listing,
Yep.
right? You don't. Let's say the market shifts,
Yeah.
right? And maybe there's too much of a lag behind what you're seeing sold,
Yeah.
expired, and everything, and the price is actually different.
Yeah.
Talk to me.
Yeah, and honestly, the pricing conversation will never stop. As a professional within the real estate, especially whenever you're a fiduciary towards the sellers, you're always having to look at the market, look at days on market, evaluating what else is sold, new active listings. If there's an active listing that showed up 1 week after yours and it's priced lower, but in better condition, then you have to have a conversation. And I always have to have a conversation with the sellers, weekly. Because
Wow.
the number one thing that realtors get complaints about is lack of communication, right? I hear it way too often. So I try to talk to my clients, whether they're a buyer or seller, weekly, and just update them on the market. And I'm always in front of a computer because when I talk and when I sell real estate, I bring a lot of statistics,
Yep.
a lot of data, because I can sing you a song and dance all night long and tell you that I'm going to sell your house for this much and this timeline. But if I don't have proof in the pudding, then at the end of the day, I'm just a salesperson and not an actual professional in the industry.
Yeah, and such a good point. Is there's a difference between a fly by night real estate agent and a true professional. And I'm not. I'm hey, I'm sure there's a Becky out there that's killing it. But let's
Or
say,
Becky.
yeah, Becky
Sorry,
walks
Becky.
in. Yeah, sorry, Becky. It's Rhonda, or no. Let's go with
Never mind.
let's go with Mark.
Yeah.
Mark, he works at Redfin. Shout out to Redfin. And he walks into your door and you have a price in mind. The actual value that your home is going to be sold at is $450,000.
Yeah.
Mark walks in, you say you want to sell your house at $500,000. You want a low commission, and that's how you are going to sign your listing contract.
Yeah.
Mark, who doesn't know better, says, sounds good. and just wants to put a sign out front.
Yeah.
Mark is doing you a disservice,
Yeah.
seller. He is lying to your face, or he doesn't know better.
Yeah.
And your house is going to sit on the market
Yeah.
and get the stigma of sitting on the market.
Yeah. And that's the difference, Wes, is he's doing what worked in the low interest rates market, 2020 to 2022, a portion of 2020. Nowadays, you flat out just have to work a lot harder. You have to strategize to actually get homes sold. And what he's doing is the three P's of real estate, which is
You put the house on the MLS, you put a sign out front, and you pray that the house is going to sell.
yeah, that worked during those markets.
Totally.
Not anymore.
Not anymore. And I think that is a big, big reason why we have these two statistics in front of us. 45% of realtors didn't sell a single home last year. Yeah. And I think that's because they were a lot of real estate agents came into the picture in 2020 and 2021.
Yeah.
Because everybody was buying and selling homes like hotcakes,
Yeah.
right? So let's hop into a business where easy money, let's go. And they never had to grind.
Yeah.
Us, we were mostly brought up
Yeah.
in this, we could say it, different market.
Yeah.
And so we've had to push through a little bit more.
I mean, this is all we knew. It's either we sink or swim.
Totally.
Because we just didn't know better. And it, like you said, it goes back to why 45% of agents didn't sell a single house last year, because they thought it was easy, a get rich scheme, but then they were in for a rude awakening whenever the interest rates shot up.
And I think that is a great segue into something that is very, it's coming up, y'all. January 31st, Phong, when I say January 31st, what comes to mind?
January 31st, the only thing that comes up to mind is some new regulations.
Almost. Everybody, Phong almost had it. January 31st is when our MLS dues are due.
That's right.
So every year, realtors have to pay fees to all of these organizations.
And they're always going up.
And they are always going up. So Phong touched a little bit about the NAR, National Association of Realtors settlement. That is somebody that we have to pay, but we also have to pay into our listing service. And what is it this year? Is it $800? $895?
Something like that.
Yeah, it's $800-900. This is not. It's not cheap, and that you have to pay every year.
Yep.
January every year.
It's not just that. You have RMLS dues.
You have dues out the wazoo. Let's just say that you are spending over $1,000 on dues if you're part of multiple listing services.
Yeah.
Multiple listing services like myself. I'm sure you are.
If you're part of multiple associations, like maybe Clark County associations as well as Portland Metro, I mean, that's another $800.
So you have to think about that. And so what I predict coming into this year is that when we look at 45% of agents not selling homes, and the Pied Piper needs to get paid in January to stay a real estate agent, we're going to see a lot of people leave the industry. What are your thoughts?
I think so too, and it's because it's like what you said in the earlier other podcast. It's such a low barrier of entry that a lot of these people they'll want to try to do it as a extra side of income, which is fine, great, more power to you. But these new agents that are coming in, they're still going to have that rude awakening, especially since rates are still 7%. But I'm kind of glad.
Oh, I'm so happy.
I'm kind of glad that.
No offense to the Becky and Marks out there.
Yeah.
Tell me why you're glad.
Yeah. I'm just kind of glad because it goes back to less competition. And it's not only that, but it's the perception of our industry that we're not just mediocre, that only the people that are working right now, the 55% of agents that do sell houses, are true professionals, and this will level us up. We're no longer just a used car salesman, but we're actually there to help people. We're fiduciaries. We're professionals.
Totally. And I think something to, okay, I, I know you know it. Us realtors can tell when we are working with our co-agents. A co-agent, let's say I'm a buyer, I'm representing the buyer. I'm the buyer's agent, and let's say Fong's representing the seller. He's the seller's agent. He would be considered my co-agent. We, as two different entities representing two different parties' interests, are working together to make a deal, get to the closing table. And so you can really tell pretty quick off the bat if your co-agent doesn't know what the fuck they're talking about.
Yeah. Yeah. It's just, and you can tell by how the first interaction is, especially as a listing agent that I primarily work with. If they don't call me to talk about offers and even start the negotiation process, and if all I'm seeing is just an offer, which is great, I got an offer, but if there was no rapport and they're competing, what's going to happen?
They're going to lose. Well, not only that, something that as a buyer specialist I do for my clients, Portland metro market, this is why you hire me. If you're outside of it, your buyer's agent better be doing this. Call the listing agent.
Yeah.
Find out what's important to your sellers.
Yeah.
To their sellers, right? So let's say Phong is the listing agent.
Yeah.
And I give him a call. No shit that the price is important.
Yeah.
Obviously, the more money, the better. You need to find out. Great example is a house I offered on today. We have cash. We can close fast. They gave us an inspection report. The only reason I got that inspection report was because I talked to the listing agent to see if they had one already, because they were back on market. And we got that inspection report. We went through it with a fine-tooth comb. That's another thing, buyers.
Yeah.
If your agent doesn't go through the inspection report with you,
Yeah.
that is not an agent.
Yeah.
That is somebody just trying to get money. Okay? You go through that. We're great. I call them. What's important? Can we close fast? They can close fast. They're back on market. They're ready to move. What's important is they have 2 young daughters that they need 7 days of a rent back, basically renting the home that is now owned by the new owners to the previous owners for 7 days so they can move their little girls out.
Yeah.
I would have never known that.
Yeah. And when Wes says rent back is like where the seller has the ability to stay for a specific amount of time after the home closes or after escrow closes. They get all the funds. This is extremely actually beneficial for the sellers because it gives them peace of mind that the home closed, money is in their pockets, and then it gives them a little bit more time to breathe so they can pack, making sure they can get to their next destination in a organized manner.
Totally. So, yeah, I think we should talk about something very important, and that is how to win in a transaction. And I'm kind of going to take the spotlight here, Phong, as a buyer, how to win. And when you're going up, when you're offering on a house, obviously we're not talking about money. If you have more money and you offer more money, you're probably going to win.
Yeah.
Let's be honest. If the house is $500,000 and there's another offer at $500,000, if you offer more than that and you don't have terrible terms, you will probably win.
Yeah.
It's that easy.
Would you say right now multiple offers are happening?
I see it so much less.
Yeah. Same. Are we getting 8 to 10 offers like that we saw back in 2020? No. But if a house is in a desirable location in a certain area, fixed up, shows well, yeah, you're going to get a few offers.
Totally. Something to say is if you get multiple offers at the get, your realtor did not price it low. Your realtor priced it enough to sell. It's enough to be competitive. And if there's competition, most likely price will be driven up either way.
Yeah.
Phong, what would you say besides price is important when it comes to an offer? the types of terms, things of that nature.
Yeah, I mean, and not a lot of people know this because they think of, oh, a bank loan is just a bank loan, but there's different types. There's a conventional loan, there's a VA loan, Veterans Association loan, and then there's a FHA, which is the Federal Housing Administration loan. All these loans are different, but they also have different requirements in terms of inspection, the appraisal, timeline. Timeline's also important, like you said at the beginning. And so each loan product is going to be more advantageous than the latter. Obviously, cash is cash because it has the least amount of contingencies. Now, why are having least amount of contingencies important? It's important because it's less hurdles. Because if you have an appraisal or a financial contingency for like an FHA loan, you still have to make sure those loans get approved as well as the appraisal gets approved before you can still close. Like just because you got your house under contract as a seller doesn't mean you can start packing.
Oh God, yeah.
Yeah.
Oh God, yeah.
Because I've been in the early of my career, I tell clients to start packing, but no,
Yeah.
it's a process. And that's why it typically takes like what, 30 to 45 days, depending. What would you say is the most advantageous other than cash in terms of a loan product?
All right, buyers, you got your offer accepted. Good job. However, there are still hurdles through the escrow process that you need to get through. And I'm getting to your question here, Phong, but I want everybody to know, especially if you're a first-time home buyer, you need to know this. You have some major things and major hurdles coming up that can prevent you from getting to the closing table. I'm going to touch on the two big ones here, and that is your inspection. We could have a whole podcast on inspections.
Yeah.
And then the appraisal. The appraisal is a big one, especially if you have financing. Like Phong said, if you have cash, cash is king. You don't have financing contingencies. The money's there. Money's not going away.
And I'd say these two hurdles are also the biggest for a seller because
Oh, certainly.
inspection period is where the real negotiation starts, unless you pre-negotiate as is, which we can get in later. But having that appraisal, because if it doesn't appraise, then you lose equity.
And you might lose the deal.
Yeah.
To be quite frank. So you asked me conventional loan. So conventional loan versus FHA loan versus a VA loan.
Yeah.
Were the three. When it comes to the appraisal, I prefer a buyer. I'm sure as a seller's agent, you prefer a buyer that has a large down payment and a conventional loan.
Absolutely. Conventional, if it's not cash, is the best because
Totally.
and the reason why it's usually a shorter closing timeline, other than its appraisal is the least strictest.
So much so that I have a client. We're touring homes in 6 days. She's coming up from California, and has a VA loan, and we're touring it on the 8th, and she wants to try to close by the 18th of January.
Yeah.
I told her, absolutely not. It's not possible.
It's impossible.
It's impossible because not even including the inspection contingency, a VA loan, the average days back for an appraisal on a VA is 14 to 21 days. If you are a VA buyer, you need to be aware that your appraisal can take up to 14 to 21 days to come back, and the VA appraiser might call things out that need to be fixed for the loan to be funded. So that's a VA loan. You got a long time for an appraisal. FHA, 3.5% down normally. Low down payments, they're okay, but they can be tricky when it comes to, again, the appraisal. FHA has some pretty strict rules, not as strict as a VA that I have found. But again, you might have to go back to the drawing board to get things fixed and repaired.
Yeah, I think VAs close the longest
Oh,
because
certainly.
I think they actually close closer to like 40
Oh,
days.
if not
Yeah,
longer.
and I also believe the appraisal is the strictest, even more than FHA. And so I think that's why conventional will always be the top tier in terms of what a seller should pick. Yes, if there's a price difference of maybe just $5,000 between the offers, I might try to not necessarily persuade, but recommend that they choose the conventional versus a FHA or a VA loan.
Oh, totally. And that's not to say, buyers out there, that's not to say that FHA or VA, there's nothing wrong with it.
Yeah.
It's just you need to expect that there's going to be some more hurdles than
Yeah.
if you had a conventional loan.
Yeah.
Or obviously cash. Now, we've talked a little bit about that, and I want to go into something a little bit more uh, digestible here, and that is two reasons to buy or sell in the year 2025. Now, buying, I think, is a little bit more obvious, so I'll save mine for a little bit later, unless you need time.
No, go ahead.
You got it?
Yep.
Okay, so two reasons to buy in 2025. I don't care what year it is. Getting into the real estate market long term is always a good plan. Absolutely, it comes down to motivation in your life. If your family's growing, you have a job that's moving you, that is great motivation to purchase a home. If you can make the sacrifice and afford a mortgage payment, it might you might not find returns in 5 years. I don't know where the market's going to be in 5 years.
Yeah, no one does.
You will find returns in 10, 20 years
Yeah.
because you have a fixed mortgage. Rent is not fixed.
Yeah.
In 10 years, I can't even imagine what rent is going to be like in San Francisco, in Portland, in Seattle. It's
Yeah.
going to be astronomical. I could tell you that. Your mortgage will be the same. Right now, it seems high. It won't seem high later down the road, and you can always refinance if the interest rates get better. That's a big reason to purchase is
Yeah.
the long-term play. That is your retirement. Your home will appreciate in value. There's
Yeah.
only so many homes out there.
What would you say, Wes, is an asset that probably every single millionaire or wealthy individual has?
It's real estate,
Yeah,
isn't it? God, isn't it 90% of all millionaires in the United States became millionaires through real estate?
absolutely. Yeah.
It's it is an asset that does not depreciate. Does
Yeah.
your home?
And
Sure.
it's a huge, and I stand by this, it's a huge hedge to inflation.
Huge. Yeah, talk more about that.
So it's a huge hedge of inflation because we know when inflation happens, what happens to the dollar? It shrinks. It shrinks, right? And so your money, your dollar is not worth a dollar. It's probably worth 85 cents. And so, but if you have the same asset in terms of real estate, you buy a $100,000 house, obviously not within Portland, it's going to appreciate because of the inflation, because naturally the market is going to go up. And so it's a hedge against your deflating dollar.
Absolutely. And in more layman's terms, it outpaces
Yeah.
inflation. Right? If you have a dollar, like he said, and you put it under your mattress,
Yeah.
in 10 years that dollar will be worth less.
Yeah.
If you had a time machine and you took a dollar bill 30 years into the past, it would be worth more because you can buy more things with it,
Yeah.
right? If you it's same goes someone from the 80s teleported into the future today, their dollar would be worth less. They can't get a carton of eggs like we just talked about.
Yeah.
So don't leave it under your mattress. Now, the reason a lot of people will invest in the S&P 500, right? This might be more digestible is because over year it appreciates, your dollar appreciates 7 to 10%
Yeah. It's
depending the
pretty
year on
consistent. Yeah.
average, which is more than your dollar depreciates from inflation per year.
Yeah.
Those percentages are where it matters. It's the same thing with real estate. If you
Yeah.
bought in 2021 though, you're probably looking at your house and going, "This is a depreciating asset."
Yeah.
Wouldn't you say?
Yeah. Unfortunately, those home buyers at the time, they bought at the peak of the market. And that's why it was a true seller's market because those sellers that I helped, sell their homes, they got a lot of money. They saw multiple offer situations. They saw appreciation that was skyrocketing. It was okay to price your house, maybe 10 to 15% over and still eventually get what you want. Nowadays, you can't.
Yeah, and that's why real estate is not always a good short-term play. And
Yeah.
that's why I'm saying buying in 2025 is good for a long-term play because buying real estate, no matter what, is always a good long-term play. Now, Fong, what's a good reason to sell your home in 2025?
I think, just based off of, because I'm a numbers guy, right? So I'm looking at the multiple listing RMLS and I'm seeing inventory levels. And so right now, inventory levels, we're still seeing a limited amount of inventory. So what does that tell me? What does it tell me? It tells me that home sellers aren't selling. So therefore, if we have the same amount of buyers within the pool, but even less inventory, there's more competition for the buyers. And so you'll still get potentially multiple offers, not 8 to 10. You're still going to have demand. Is it as fast as 2020 to 2022? No, absolutely not. But you're still going to be able to sell your house. And I feel like my second reason to sell your house in 2025, especially leading, into the year, is interest rates. What did we see in 2024? Why we saw 2 million less sold versus 2022? It's because of interest rates. Interest rates, I do believe, are starting to trickle down. It's going to take a while, and so there is strong prediction within experts within the industry. Keeping current with the matters, they have all these levels. Are saying that interest rates by end of 25 will be closer towards 5 to 5.5%.
Wow,
Fingers crossed.
totally.
And so, what happens when this happens? More buyers will step into the pool. And when more buyers are stepping into the pool, but we still have the same amount of inventory, that drives up the value of your house. And so, I think 2025 is going to be a lot stronger for sellers compared to 24
Mm,
because 24 was riddled with just high interest rates. What did we see at one point? We're at
eight and
like
a
eight and a
half.
half.
Yeah,
It's crazy. Obviously, we'll look back into the 70s,
yeah,
70s and 80s that we
18%. Yeah,
always like to hear that from consumers is but the difference between back then and now is there's a lot of first-time home buyers. A lot
hmm,
of people our age, millennials who've never purchased a house before, and so they're entering the unaffordability crisis that we saw in 24, and I do believe things will be a lot better in 2025.
yeah. And I think that leads into my second reason to purchase in 2025. And this might be where we kind of bash heads for the first time. And finally, I get the selling aspect in 2025. Buyers, real estate is on sale right now. I am house I offered on today originally priced at $500,000. We are offering at $460,000.
Wow,
They
what a steal.
Not from us.
Yeah,
They price dropped down to $460,000.
yeah,
That is $40,000 off of a house. Even with a high interest rate where you're paying a couple more $100 a month, it would take you a decade to make up the difference of $40,000 in pricing.
yeah.
You can never renegotiate the price. You can absolutely refinance your interest rate. And so if you are able to buy something on sale $40,000 less cheap, my God, you absolutely should. And ride the appreciation train up the ladder. It's just gonna hit. So
Love that.
I get where you're coming from, Fong, with
Yeah,
interest rates coming down, so you might want to sell. I you mentioned it. I think we're heading into it. We are in a buyer's market if you look at the big picture.
absolutely.
Everybody focuses on interest rates. Why
Yeah,
do you think people focus on interest rates?
because it relates to their monthly payment, which is the
Sure.
strongest factor in terms of, in my opinion, in terms of if you want to buy a house or not. Correct me if I'm wrong.
No, you're totally right. And that's why I said if you can sacrifice and you can afford it,
Yeah.
go for it.
And that's what I want to make a note is like, you should not buy or sell your house in 2025 if you're just not financially ready. If you don't
Totally.
have the necessary funds, maybe you need to work on your credit score. Maybe you're just not mentally there because of all the global economic situations that we're dealing with,
Yeah.
then it's probably not a good time because we don't have a crystal ball, right, Wes?
Totally.
Unfortunately.
God, I
Yeah.
wish.
And so we don't know what's going to happen. We can only predict by using a lot of data, experts, analysis, and our own intuition and experience. But at the end of the day, it is your decision as a consumer to make it smart for your future.
Totally. And I think that is a great place to scoot over into our predictions for 2025. It's January 2nd when we're filming.
Yeah.
Oh, no, now you know. Uh, this will probably be coming out at a later date. Uh, but yes, it's January 2nd. And so we're looking towards the future. We're looking towards this year. Fong, do you have any predictions for this year?
I think predictions in terms of valuations, we're going to continue going up. Are we going to see slight dips where there's small corrections? But I do believe we're still going to see a appreciation of about anywhere between 3 to 5%. We saw the same thing in 2024, just at a smaller scale because there wasn't a lot of transactions. But if you look at the broader picture, we did still see appreciation. So I'll see that. I'll probably predict it's going to happen again in 2025. Plus, with interest rates going down, maybe towards mid fives, I think it's going to be. I think it's going to be fun. It's going to be a lot better market.
But Fong, don't you know the market's going to crash? Do
Right?
you ever get that?
Oh, I mean,
I'm waiting for the market to
yeah. I
crash.
think I talk to at least 1 to 2 people a day who says, "Oh, I'm waiting for the market to crash," or "I'm going to die in my house," stuff
Yeah.
like that.
Why
Yeah.
why do you think as why do you think people are predicting the market crashing?
I don't think people are predicting it. I think people are hoping for it because they are hoping they can still see what happened in the 2008 financial crisis. But what people aren't realizing is that crisis happened because of bad lending standards.
Yeah.
And so nowadays, it is so tough to get a loan. Plus, interest rates being so elevated, the lender or the bank will make sure you're a viable product in terms of a consumer before they even offer you a loan. And so I think going into 2025, the market is not going to crash because it's what I said at the beginning. It's a hedge against inflation. Not only that, but it's a hedge against recessions. Because in 2008, we saw a reduction of almost 50% in home values. It was a slaughterhouse. I would say that was a crash or
Yeah.
a bubble bursting from the dot com. But then look what happened. We saw home prices steadily go up.
Did you hear that, folks? Even with a market crash,
Yeah.
with a long-term play,
Yeah.
prices went up.
Yeah.
That's why you
Hedge.
buy real
Yeah.
estate.
It's hedge against inflation, hedge against recession. I mean, it's it's such a great product that I do believe within my heart that it's probably the number one asset that you can have other than time. I do value time as probably the number one asset, but real estate because it's the people I talk to whenever I help them buy a house and then later down the years I help them sell it. They're so appreciative and thank you because they sold for thousands of dollars. They helped put their grandkids into college. They're able to get out of a hole because of that certain asset, which is real estate,
Totally.
which is extremely powerful.
I agree with you. And it's something to touch on. It's 2025, yes, but we need to look towards the future of 2035 at
Yeah.
the same time. Fong shared with me a very interesting article about cities most likely to hit $1 million median price for housing.
Yeah.
And do you remember this article?
Yeah, yeah, yeah.
Do you want to talk about it?
No, let's both talk about it. Yeah.
Okay, okay.
It's pretty scary because it's almost a push and pull because if home prices are that elevated, how can someone really afford a house at that point?
How do
Whenever,
people afford houses in
yeah,
San Francisco?
exactly. Yeah, they make it work. But it's also what we've been talking about: generational wealth, home appreciation, hedge against inflation, hedge against recessions.
Totally. Yeah, and that's just it. Is even if you look at the future, it's something that real estate is going to be helping you with. I think also real estate is such an interesting asset. And this seems very obvious. Uh, I could buy stocks. I can't. I don't know. Sleep in my stock. I can sleep in my house. You
Yeah.
use your house. You're going to make memories in your house. This is something that you own and can make your own. And I don't know any other asset that can do that.
Yeah.
A car, but that's depreciating. You're not going to make more money unless you bought the AC Cobra of today.
Yeah.
Like it's not going to happen. Real estate always will
Yeah.
appreciate. So yeah,
Yeah.
real estate's always the good move.
And something to just briefly talk about is it's always about the rates, right? And so the psychology of buyers. And so in 2022, probably mid 2022, that's where we saw such a spike in the rates. And then 2023, we continued seeing elevated rates. That was a shock to the consumers. They were shocked. They were waiting to see if it pulled back. I think nowadays, predicting going to 2025, believe the shock is over. Consumers, first time buyers, millennials, they're all realizing that rates are kind of here to stay. Will it continue going up and pulling back down? Absolutely. But I think the shock is over and people are realizing this is the new age. This is just something I have to deal with. Just as if you got a flat tire, you just have to deal with it and then you continue on. I think the same thing for rates. The shock is over.
I agree. All right. We're going to try to navigate this because I think that there has to be a talk about 2025.
Yeah.
We are 4 days away. Is it 4 days?
To 2025?
No, January 6th.
Oh, January 6th.
What happens on January 6th, Phong?
President Trump,
President Trump.
Mr. 45th.
We would be lying and stupid to not tell you it's on our mind. It's on my mind. I know it's on your mind. It's on everybody's mind.
Yeah.
I think a lot of people they're either very happy or very scared. I don't think there's any in between. And so, Phong, I know that politics scares you to talk about on this, but it's something that I think we need to talk about. I'm not trying to
Yeah.
have you tell me that you're about to go blow up a Cybertruck or you're about to kiss the ring of the orange guy. I'm not trying to get your political stance here, but
Yeah.
I'm more interested in how you think the market or God, what do you think? How is your life as a listing agent going to change with President Trump?
Believe what I do in terms of helping sellers and navigating the current market has very little to do with what Trump does.
But Trump gave us low interest rates, Phong. Don't you know that?
I I would disagree. I don't necessarily believe he gave us low interest rates. I think it was probably the previous administration, and he was just a part of that. Am I a Trump lover? Am I a Biden lover?
I
I'm
don't think
usually
this man loves anybody in politics.
I stay pretty neutral because I see it as whatever happens happens, and I just have to navigate it to my best ability with whatever resources I have available. And because we're just going to have to deal with it. Like, if I'm going to help seller and just be like, well, I hope Trump does this, then am I really being a fiduciary for those sellers if I'm just hoping and praying that something or specific action will happen? No. I just have to deal with it.
Totally. Well, I'm gonna make you commit here.
Yeah.
Okay. Uh, what do you think could really happen, I guess? What do you think are some pluses and some minuses to a Trump presidency, a red House, a red Senate, a red country, red politics, the red wave, everybody?
Yeah.
What do you think are some benefits that might be coming down the
I
pipeline?
wish I had more knowledge of politics, but what I believe could happen is rates going back down, which is what we already predicted. And I think lending standards will probably become a little bit less strict because we all know Trump was a real estate magnate before he got into politics. And so I think
I
he's
think the
going to
word's magnate.
magnate.
Hey,
I don't
but
know.
he also attracted it.
I like magnet.
I like magnet, but yeah, sorry to interrupt
And
you.
so I think in terms of real estate, it's going to be probably more advantageous to the consumer. But again, I don't know. And I don't want to base how I sell real estate and how I help my clients on a political presidency. And so at the end of the day, when the rubber meets the road, nose to the grindstone.
I love that. And that's why you are the top agent that you are, is because no matter what happens out in the world, the environment, you're going to keep trucking and keep working and you're going to bob and weave as the punches come in.
Yeah.
However, this is a podcast. We're having fun here. As much as we want to help, I want to hear your thoughts. Is it just because you're unaware or
I'm unaware.
okay?
I the news I read, which I'm sure you know, is strictly regarding real estate, finance, business,
Well, what are you
which
seeing? What do you okay, let's say I'm gonna cut you off. You're
yeah,
seeing because I don't want you to give me a non-answer. You're
yeah,
seeing the news and real estate and finance, and
yeah.
that's great. What are some things and reactions or articles you're seeing with people predicting what's happening? Does that make sense?
Yeah, yeah. I'm seeing a lot of qualitative easing. Are you familiar with that term?
Please enlighten me.
So essentially, qualitative easing is essentially, it's what I said, less like lending standards. It's easier to get business loans and commercial loans, easier to get potentially residential loans because inflation is no longer high. That's when qualitative tightening happens is the market is not doing so good, so we have to tighten up the market in terms of banks and money. So so they can kind of take care of the market and have a closer eye. But whenever they ease it up, they're trying to allow more people to spend, more business to create, more jobs to happen, so the market and the economy can start flourishing. And I believe since we know Mr. Trump is a businessman at the end of the day, a real estate guy, I think he's going to start easing things a lot to really push the market and the economy a lot better, especially with Powell already doing the reduction in rates, and we're seeing a 2.5 to 2.9% in terms of the consumer price index, which is inflation levels.
Mhm.
I think the economy, based off of what I'm reading on the internet and what I see on the TV, is there is a positive outlook.
Totally. There we go. I think that's a great answer. I agree with that. So I think you said it right. There's people on the right that are more. He's a businessman, and they look at his previous presidency,
Yeah.
and let's just state some facts here. He spent a lot of money.
Yeah.
Okay,
I,
it was a lot. You can look this up. He spent a lot of money, and that could have been good. That could have been bad. But when you have a lot of money being spent, the economy is going to see it. And
yeah.
yes, the inflation rate is low. So we're probably going to go into an economy where there's
Yeah.
going to be qualitative easing.
Yeah.
Absolutely.
I think there's also some fears with his presidency, mostly with allies across the seas, which affect like all the wars that we're seeing, which I that could play a role with how the perception of the US economy is to the consumers. Like, do they want to deal with potentially buying or selling a house if there's craziness across the seas? So I do see some negatives because he is an entertainer in
Yeah.
terms of a president. He kind of is a madman to a degree.
Yeah. Yeah.
Cut that out. I
Yeah.
don't.
Nope.
And so I do see both sides. But again, it just goes back to I'm going to bob and weave. I'm going to continue working hard, and I'm just going to deal with it.
Totally. I
What do you think?
Oh boy,
Yeah.
I think there's a lot of points on both sides here. Uh, for the people on the right, you're very happy right now because of what you saw in his first presidency, 2016 to 2020. You're happy because the economy seemed to be doing really well, and I can appreciate that. There's a reason why inflation went up. We had a little thing called COVID. I don't know if you've
Yeah.
heard of it.
Yeah.
The government spending and printing of money was astronomical. And when you have more dollars, inflation goes up because there's more volume of
Yeah.
dollars. You have to charge more. It's just how
Yeah.
inflation works.
Your dollar becomes less.
Less. Instead of one out of $1 trillion, you have one out of $3 trillion.
Yeah.
That is less of a ratio of the dollars.
Yeah.
So that's how it works. So what do I think? I think on the right, people are happy. I get it. There's a lot down the rabbit hole you could go with the economy. He's a businessman. People appreciate that qualitative easing. He, if wars end, it's only good
Oh,
to an
absolutely.
extent. We
Yeah.
make a ton of money off of making arms and weapons that we sell across the world. Uh, on the left, we're in Portland. I get
Yeah.
it, guys. On the left, this guy's the boogeyman. Okay. And we are, let's
Keep
talk
Portland
about the
weird.
economy. What's that?
I said keep Portland weird.
Keep Portland weird. Hey, the boogeyman's coming. We have to think about on the left tariffs, right?
Yeah.
We're talking economy here. I'm not here to talk about socio stuff. Like maybe you don't like the guy, whatever. Think he's a racist. Okay, but we're here to talk about the economy and how it affects the real estate market. And if the cost of goods goes up, we need to really consider, as you said, the monthly payment,
Yeah.
right? Buying food and buying water and the essentials comes first, especially if you have kids, that comes first. If those things cost more,
Yeah.
it's going to be harder to save money for a down payment. It's going to be harder
Yeah.
to afford a monthly payment.
Do you believe with whatever stuff he puts into effect now, it not necessarily will go into effect, or we won't see a result until potentially the next presidency, whether it's the next
Totally.
4 years? Just because I feel like the actions of the current presidency doesn't really play an effect until
Later.
years down the line. I could be wrong. I don't know. I'm not
No,
a
you're
political.
totally right.
Yeah.
Um,
And so predicting 2025, it's tough to say if tariffs will really play in our effect. I don't know though.
we'll see. My God, I am not an economist, nor am I a politician. I
Yeah.
don't know how this works, nor am I Raytheon or whomever, right? There's so many things outside of us. All I can do is look at the past and
Yeah. Very
guess
true.
kind of what's coming up in the future. Uh, one thing that we can look at is Trump spending all this money and
Yeah.
helped the economy in the short term. We hit inflation. Would it have been better or worse? COVID threw a wrench in there. And, whether you're on the right or the left, you could blame Biden and think he's he doesn't know up from down, whatever. Uh, Inflation got down to the 2.5 that we're talking about. And that got down because of the things that we saw through these last 4 years. Okay. That's just a fact. Now, we're going to see that economic benefit no matter what.
Yeah.
2.5 CPI is better than 9.
Oh, by far.
We did it, guys.
Yeah.
We got below that 3 that we wanted. I think
Yep.
we wanted below 2. We did it though, boys.
Yeah.
Like we did it. We got it down there. Kudos. We're going to feel good about it. And I think that Trump is going to come in and I think he's going to start spending. And I think that's going to affect our economy quite well.
Yeah.
Okay. Uh, I think that civil unrest is never good for the economy. And it is very interesting how much politics has entered into the real estate market.
Yeah.
I talk to people that are either like, it's time to buy because President Trump is about to be President Trump again,
Right.
or
Or the latter.
the or the opposite, right?
Yeah.
They're holding off because now they're like, oh, he's gonna fuck it up
It's gonna
again,
screw up the market.
or
Yeah.
whatever, right? It's hard to predict. I predict that we are gonna have a good next 4 years
Yeah.
economically. I think it's gonna feel good.
Yeah.
Uh, Overall, we'll see how these tariffs go. And to be honest, I don't know if he's actually going to do it.
Oh, okay.
Yeah, he's backing away on some stuff. And I get it. You want to get elected. All the politicians lie. And then they're like, oh, I'm going to do, education for all and Medicare for all. And yo, we're still paying for health insurance. So
Yeah.
obviously that never happened. Uh,
Overpromise, underdeliver.
Overpromise, underdeliver.
Sounds like kind of the 45% of
45%
realtors.
of realtors. Becky, God damn it.
Mark. It was Mark.
This is Mark. Both of you. But what Phong is saying is so true. And I don't have a crystal ball. I predict the economy will feel good for the next 4 years.
Yeah.
Now, at the same time, you need a realtor that is not reactive, but proactive. It is so different when you are reactive because you can't predict what's coming. You don't know where to go, and you usually act off of impulse.
Yeah.
If you're
Emotionals.
emotions, yes. Proactive agents and proactive buyers and proactive sellers, they're the ones that are going to hedge their bets.
Yep. And when I think
Okay.
of proactive, I think of strategic. They're ready for what's going to happen and they have potential options. And so if a certain problem happens or an outlook or an issue happens, they're presented with a few options so we know what to do.
Totally. And that's just it, y'all. At the end of the day, we're here. This podcast is here to turn you, the consumer, into a more proactive consumer and not reactive. We want you to go into a real estate transaction knowing what to expect and knowing how to win, whether you're a buyer or you're a seller. And that is what this is here for, is to be proactive. Wouldn't you say?
Absolutely agree with you, man.
So, with that being said, this was our first episode. We will be putting these out hopefully bi-monthly. That's once every other week. That's our goal. So, we will be coming out with, what's the math on that?
Yeah.
26 episodes,
Yeah.
hopefully, this year.
Yeah. All designed to help you as the consumer to make the decisions whether you're buying or selling. So you're more educated.
Yeah. And this first episode was hopefully broad enough to give you an introduction to a lot of different things, kind of understand who we are and how we can help and what we're here to do. From here on out, each episode is going to be a little bit different. We are going to have a segment at the beginning where we talk about a current event. I'm going to bring one, Fong's going to bring one, and we're each going to talk about the current event that we see in the market. And we're going to react to that. After that, we will probably talk about strategy of a buyer or seller or something that we're seeing based off of that current event, or again, make predictions. And now, after this episode, we're going to start talking about different transaction stories, actual transactions that we have been through and what we've learned from them and the wisdom we can impart upon you from those transactions.
Yeah. Yeah, it's extremely powerful because the best stories, the best experiences that you can ultimately learn from is not only the mistakes you made, but the experience that you've been through and being able to put that in helping the consumers or helping each other in terms of guiding you.
Great. Well, I can speak for only myself, but I've had a lot of fun doing this. I
Yeah,
think this is
this was amazing.
This was great. Hopefully, you've learned something. If you have, give us a like. Share this with somebody that's thinking about a real estate move. If they're in the Portland metro area, contact myself or contact Phong Tran. We'd be happy to help. If you know somebody outside of the market, make sure to send them this so they know how to interview and find an agent. But myself, Realtor Westley Colebank, I'm signing off.
And this is Phong Tran with Tran Property Group, also signing off. Thank you guys.
Appreciate it. Take care.